The talking heads and the billionaires and the YouTube armchair stock market quarterbacks are all proclaiming and prophesizing a 25% drop from here in the general market and telling us to cower in fear beneath our mattresses with our 3 remaining pennies in our bank accounts. But I am here to tell you my opinion, and that is that they are way off to the downside. So in this video, I'm going to show you my rationale for this contrary opinion. It has to do with the stealth correction, which hopefully you're familiar with. Then I'm going to talk about where I project the market to fall. I'm going to tell you what I think we should be doing right now. And then lastly, if you make it to the end of this 15 minutes or so, I'm going to talk about 3 leaders, leading stocks. And as you know, what do leaders do? They lead. Now keep in mind, I'm not an analyst or an advisor or an economist, and this is just my opinion, and this is just for entertainment. I have been investing since 1996, and I lived to tell the tale through the dot-com crash and the bank meltdown of 2008 and the COVID crash, and what are they going to call this one? I don't even know, the Diamond Hands crash or something. So, yeah, let's get started. So here is the SP 500 index, the largest 500 publicly traded companies. And as you know, the S&P 500 rolled over right at the start of the year and is down now at its June low of about 25%. And we had this great little rally from mid-June to mid-August. It came up exactly to the 200-day, rolled over hard, and now it seems to be plummeting into the abyss. Now, the reason I think the pundits are wrong is because they are marking the beginning of the crash from here, and they feel like a deeper crash is necessary. But in reality, the market correction started way before January of 22. And in the NASDAQ, the top was November 22. But in reality, most stocks started crashing long before this, months before this. It's just that a handful of mega caps, Amazon, Alphabet, Apple, Microsoft, these ones continued to go up as the rest of the market crashed, falsely inflating these indexes. So, and let me show you a couple examples. So let me try to re-articulate my assertion here. This is kind of hard to explain, but the pundits are measuring from November of 21 or January of 22, and when they feel that the market has farther to go. But in reality, the crash happened stealthily long before this, and the losses, we're not down 25% like the S&P 500 says. Many stocks, in fact, most stocks are down 50%, 75%, 90%. Let me just give you 3 examples, but there are hundreds of them. Almost every stock except for the mega caps. So here's TDOC. So the general market, the S&P 500 rolled over in January of 22, but Teladoc's top was in January of 21. It's been going down for almost 2 years, from 300 to 25. Let's look at another one. Here's former market darling Zoom. The S&P 500 started crashing in January of 22. The NASDAQ, November of 21. But Zoom peaked in November of 2020. And it's fallen from 600 to 80. Let me show you one more. This is Corsair Gaming. They make high-end, I don't know, joysticks and head pieces for gamers and so forth. I'm not really into all of that stuff. But again, the general market, S&P 500 rolled over in 22, but Corsair, it peaked in November of 2020. It's been going down for 2 years, from 50 to 10. I could sit here for an hour and show you hundreds of stocks that look just like this. So they aren't measuring correctly. These stocks have been hammered for a couple years, almost the entire market has. And if we use the metaphor of the towel, the towel was soaking wet, and it's been wrung now, completely dry. Almost all of the diamond handers, almost all of the, speculists are out now. And when all of the sellers are out, then it's not going to go down anymore. And the mutual funds are sitting there on the sidelines. Their coffers are filling it with cash every month, and they need to start buying soon. So let me tell you what I think the market's going to go, and then I will tell you. So let's start there. So I really think that we're very close. I think maybe 10 or 12% down from 3,900 in the S&P 500. So I really anticipate, I'd say 50% chance that the June low is the low, and we actually see a near retest and then a bounce, and we're on our way. Or here is the 5-year chart, or we come down, like I said, about 10 or 12%, come down to this nice round number of 3,500. We're human beings. We like round numbers. We also have a little bit of support here for the technical analysts that advise the institutions. They could use that as a reason for them to start buying. So all we need now is just a little bit of a spark, right? The towel, I guess I'm switching metaphors here, but when Jay Powell gives his speech on, I believe that's Wednesday, even if he cuts, he's going to do a 75 or even a 1.0 rate hike. But if he says something even the least bit dovish, if he says something like, we're going to wait and see now, then that's all we'll need for the market to take off. Or maybe we get some good news from the Ukraine, or maybe we get some good inflation news, or maybe the institutions just call each other and say, hey, it's time to start buying. We don't know, and we don't really need to know the exact catalyst. So I think we are much closer to a bottom than the pundits. So what do we do right now? So maybe I'm sounding a bit paradoxical here, but we don't rush in. We wait. This is a really volatile time in the market right now. We might see a sharp correction the next handful of days. And in theory, you could make money shorting stocks. But, these things, like I said, they've been going down for 2 years. They are very prone to big moves to the upside and gap ups. So I think shorting is very dangerous now. And we don't need to bottom fish, right? We're not bottom fishing. You don't get an award for buying the bottom of a stock. Wait for these stocks to build out bases. Start buying when they're climbing up the right side at a low cheat or off a breakout from a handle. I do think if you haven't been adding money to your S&P 500, to the SPY, that you could start slowly working back into that and work your way up to about a 25% position. Or if you've never invested before and you've been thinking about it, then I think now would be a good time to start easing into the SPY. That's the ETF version of the S&P 500. Historically, the worst time for the S&P 500 is September 6th to October 25th, and that is playing out to a T. And that is another reason why we just want to sit tight for another week or so. When this market starts running, it's going to run fast to the upside, and it's going to run for a long time. It's okay if you miss the first few days. And what we really need to do ultimately is not watch the markets, but watch the individual stocks. Let those stocks be your guide. When we see a bunch of stocks building out the right side of bases, and we see stocks breaking out all at once, proliferation of breakouts, if you will, then that's our signal that the new bull market has started. And that's when we want to start investing in the leaders. Let me show you three real quick. If you're still with me, it's only been 10 minutes, not too bad. Here's BJ. I've been talking a lot about this stock. It's kind of an East Coast Costco with smaller stores, smaller portions, members only grocery store, very exclusive. You can't be a member. Well, I'm trying to be a joke. The only exclusivity is you have to pay a fee. The numbers are great. Made this great double bottom, and this doesn't look. Okay, look at the S&P 500 going down. Look at BJ going up. That's counter trend strength. That's exactly what you want to see. And it is really trying to blast off, and I really think it will. I have a small position in this one. I'm going to load up if and when the market takes off. My second of three is Enphase. Now, let me go back to BJ. I know a grocery store chain is not particularly exciting, but have you ever looked at the 20-year chart of Costco? Oh, let's just do that real quick. This is the potential of a members-only grocery store. Look at Costco's chart. I think BJ has more potential right now, however, but this could be what BJ looks like in 20 years. Enphase, the solar industry, is finally, we've been talking about this being the hot industry for years, and actually it was in 2020 if I remember right. But it's hot again, and this time I think it's for real. Enphase, this is maybe the leader of all of the solar stocks. Kind of a deep second stage base here, but it's built out this nice cap. The crashing general market has just been holding it back and holding it back. And it's fighting to break out, and I really think this thing is going to be a rocket ship when the general market, goes neutral or starts this new uptrend in the next few weeks to a couple months. Lastly, Tesla. Now, I hate to say it, but the 10x, going 10x in a year for Tesla, I don't think that's going to happen anymore. It's a $1 trillion market cap. It's not going to be 10 trillion in a year, right? But as you know, the general market's been going down. Conversely, this is made about a month and a half base. It's tightening up. It's got the AI day coming out. It's supposed to have blockbuster numbers third quarter and fourth quarter. I anticipate this tightening up, breaking out above 315, and then finishing the right side of this painfully long base. So you Tesla wannabe Teslaonaires, I would consider adding a 315. Note how we got support at the 50-day. That's no accident. That's no coincidence. The big-time technical analysts that work for the institutions told the institutions to buy when it bounces off the 50-day. Those are my thoughts on the general market. It's just my opinion. Please make your own decisions. If you like the video, and hey, I've got a bunch of instructional videos on technical analysis, beginning technical analysis, and intermediate and advanced techniques. And in my opinion, they're really good. They're based off the teaching of William O'Neill and two-time investing champion Mark Minervini. And not many people have watched those videos. Some of them have less than 100 views. So if you might consider digging around on my channel and going through some of those if you want to improve your technical analysis. They're free. Okay, it's going to be an exciting week next week. Just trade really small or not at all until Wednesday, and we'll see what Jay Powell's words do to the market. Take care, everybody.